stock. And that kind of paints a picture that this is a real, viable vehicle for their best interest. And I'm always thinking suitability first, of course, for the client's best interest, and my own protection. And I have full confidence that the enforced annuities that you offer are not only excellent for the client, but are much appreciated once they do understand exactly what they are.
Well, that's very well said. I think that's, and I don't really think I've heard that particular, that all financial products like stocks are secondary products. You're not buying them directly from the company. You're buying them from somebody else, and that's the same thing that's happening with this.
Exactly. And once they understand that it's also going to be court approved, again, in the way of suitability, that puts a comfort level to it as well. I always use the court approval procedure to say that they're being protected. You know, it's to protect them, both the buyer and the seller, against any chance that something could be unfair to either party, and that they appreciate as well. As far as the story goes, had a senior that was interested in retirement income and had done a lot of research in the retail options, and in this very low interest environment, he felt that he just was not getting, in his mind, a great return on anything that was available. And I had said to him at the time that I would make my own research into maybe what else was out there, and came across the secondary market annuities that you offer, and he was very interested to at least explore that and see what the case was and if these were real. And sure enough, he saw it and had an open mind toward them, and by having a call or two with you, John, was able to embrace these, and I will say that he was very satisfied even when the case had a slight delay to that, for him to completely purchase the product. He was willing to go with the procedure, and he didn't lose any faith or sleep in the whole process. Until today, is grateful that we were able to place him in one of your secondary market annuity products.
That's good. If I remember, that case was several $100,000 total.
It was. It was the chunk of his retirement income, a large portion of it, and knowing, what the seniors are faced with, kind of a lump sum investment, for sure he was concerned that this was going to do what it was said to do and designed to do. But he didn't, have any concerns that the Provident Trust was a viable place for his qualified money, or that Bulbrook Gislane was not going to make good on the entire design package. And sure enough, everything worked out perfect, even with what was just a delay in the court procedure, which can happen. I always do tell the clients that best case scenario, everything will go through within maybe 4 weeks. Worst case scenario, it could take 4 months. But either way, all's well that ends well, and that's exactly what happened in his case. It took a little bit more time, but he was, in the end, completely satisfied and happy to do, hopefully, more in the future.
That's perfect. Stephen, thanks so much. Appreciate it.
John, always a pleasure, and I appreciate you reaching out to me.
Thank you, Stephen. So that gives a different explanation of everything from just listening to me. And I'm happy to have the input from everyone. That's how we learn how to make all of this go. One of the things that has come up from that time to time is how can I prospect for this product, and how can I get a lead and it's easy, I can call them. But if I get a bunch of them, how do I keep them warmed up, or how do I wait for them to hatch, for the eggs to hatch? And so to that end, I wanted to announce see if I can get the slide to go there. A new automated system that we have developed and we are subsidizing to bring to you if you're interested in doing it. One is, it's an automatic personalized marketing system for your existing client base. And what this means is that we will send out personalized letters each week and deal sheets from a secure database to your clients if you want to upload the ones you think are appropriate for this. And you can save many hours a week doing this because we can do it for you with your own dedicated system. Part two of that is an automatic personalized drip marketing system for new prospects. And it's a one-stop solution, includes a domain name tied to your campaign, an online lead capture system web page, fully automated autoresponder automatic marketing system, similar to the same letters for the existing client. You'll get the same welcome letters and deal sheets as your existing list above. And we can set this up for $150 and $50 a month for this complete package. I mean, this is a really fantastic value because we're subsidizing it. And we're hopeful that you'll sell something, and I think that you will. If you have a website and you would like to have a banner on it that links into your landing page where you can capture their information, that may be all you need. If you need further customization, or if you don't have a web page at all, this landing page could be your web page for a start. There's further customization available and would be additional, but this would be a really good way of automating your marketing on this. And also not giving up on people, because it takes a while for them to, oh my gosh, they're still coming. They must still be selling. They're still coming. They must still be in business. Oh my gosh, they're still coming. I better get one before the other guy gets it, because they see deals coming and going. And so I think that winds up being really important. So let's look at some cases that are going to be on today's deal sheet when we send it out. And I'm just going to get over there. To that section. And after I answer a few more questions, I thought I would go do a presentation, 5 or 10 minute presentation for those people who have never seen a complete presentation. And those who already know it don't have to say. Those that would like to review it or see it again, be welcome to. Right, so here is there's one case from the new cases today. It's $220,890 in price. Prudential Life. First payment is $1,481.11 a month. The date starts on 11/24/12, so it's current. 227 payments, 5% payments, interest on that, and the reference number on this case is 6231. So this is the first case, monthly income. The second case is monthly income as well, smaller. It's from PAC Life, Pacific Life and Annuity, $31,032, $670.46 a month, starting in deferred start in 2026 through 2035, 120 payments. So that's $80,000 total guaranteed return from the 31. A case like this might be perfect for an IRA where you want a deferred payment or somebody just wanting payments later for retirement. The rate of return, 5.5%, and the reference number, pound 1853. The next one is a lump sum from Aviva Life Insurance Company. Price is $94,792, and this one pays $100,000 in 2014. This is 2012, 2013, 2014, so it's very short case. Now, what could you get on a CD from a decent bank for that rate? Could you even get one? Probably less. Remember the days when you could put $100,000 in the bank at 5% and get $5,000 a year, and now you're lucky to get $500? Well, here's Aviva, $100,000 in 2014. That's 4%. That's 4 or 5 times as much as a CD. And the reference number on this is pound 462. So please continue to type in your questions as we go along with this. I will answer a few more questions, and then I will go through the whole presentation that I did last month, but not everybody was on that. Let's see. So what is the range of commissions is one of the questions. And they range from about 2 to 3 to 7 or 8%, and that's a function of how long the deal is. For example, a short deal, $50,000 coming back at $64,000 in 2 or 3 years, very short, that's going to be around 2 or 3%. A long deal of $50,000 coming back as $150,000 or $200,000 over 15 or 20 or longer years is going to be 7 or 8%, and everything else is going to be in between. Are there situations where a court order has been set aside? The answer is not in the United States. What is the range of return? 4 to 7. Can the payments be redirected to the trustee in a bankruptcy court if the seller has a post-court order future bankruptcy? No. The real key item is to make sure that the annuity was listed in the bankruptcy that the person went through, and that way is covered by the court. If it was not listed, then it is not, and that's something that we check very carefully on every single case by doing lien assessment and court orders and all of the due diligence. So that's a good question. What is the procedure to put an enforced annuity into a Roth or Roth IRA? Well, it's not like having a checkbox on an Aviva insurance app to make it an IRA. This is an asset that's already out there. So most people do not have an IRA trust lying around. So to do that, you need to have a self-directed IRA custodian. And after checking out a number of people, custodians, Provident Trust Group seems to be the one that we must have several hundred accounts there now. They actually call you back. We don't have any financial interest in them, but they're there because they're good. Shortly after we started, they came out with a special fee that we would like to not charge $395, but $180 for your accounts, and $50 setup fee. And so what that does, it doesn't matter how many deals you put into the account. The fee is still the same. It doesn't matter what the total dollar amount. It could be $2 million and it's still $180 a year. So we make the court order payable to Provident Trust Group, LLC, FBO, John Smith, IRA. And so the asset is held by the custodian, just as there would be in any self-directed IRA custodian. Payments go to Provident, and then they can be withdrawn or reinvested, so forth. How do you handle IRA reporting? Well, that would be something like any account. If Provident Trust, if you get a distribution from them, they would send you a 1099 on the whole amount because withdrawals from IRAs are all taxable. Moving right along. The next one. Can you calculate exactly how the effective interest rate is calculated? Yes. These are all done on the present value of the payments to determine the price. It's very similar to going the other way around, applying compound interest to the price to come up with the payments. But annual effective monthly compounding. What this means is, let's say you receive one payment today. You're not going to get 5% interest on that payment anymore because you have it, but you're going to get 5% on the balance of all the unpaid payments until you get that. There are people that will whip out their HP or Excel sheets and try to figure this out. It's easy to figure out on a lump sum. It's harder when you have multiple payments and they're compounding at COLA and all of that, and I can help you with those clients. Normally, they'll, on their HPs or on their Excel sheets, they'll be thinking about nominal interest rather than annual effective, and they'll be an eighth of a point off or whatever. But when working with them, showing them the mortgage calculations that the industry uses, we can resolve that and overcome their confusion. How do you address the lack of liquidity brought up by one of my clients? Well, these are all annuitized single premium immediate annuities, and you want them to be, you would not want to buy a payment stream that wasn't rigid. You want to buy a stream that is solid, it cannot be changed after that. So you would not want to put all of somebody's money into a SPIA if you were just buying a straight SPIA, because there's no, you get the payments when you get them. On the other hand, you would not want to not put some of your money in this because this is really good. If you have a direct court order, it would be very difficult to assign the payments to somebody else. But if you have an escrow trustee, which we do have on many of our cases, it was not very difficult to reassign the payments to somebody else, to your children, or whoever is alive, if not person B, or maybe even sell them to somebody else. This is not designed to be a traded product or sold, but it could be in that case. So the key is just to use common sense, and there are a lot of people that have money they're never going to use, and something like this is perfect. Something like this could be very perfect as well if they need income, because this is going to blow a 10-year period certain regular annuity out of the water where your interest factor is virtually zero, and this is going to be at least 4. So all right. Is it possible to split cases? Certain cases that have payments, servicing could be split. So if it's a $500,000 case and client wants to take $250,000, we may be able to arrange that, and also be able to arrange it where you don't have to worry about selling the other half of it. Do you need a license to sell these? We require that somebody have a life insurance license. It is not a security. It is not an insurance transaction. It's a third category called factoring, And factoring is the purchase and sale of accounts receivable. It's a big business in the United States, maybe 100 billion would it be. Our part of factoring, 700 or 800 million, is part of that, but it's a relatively small part of the overall factoring. Factoring, you do not have to have a license to do factoring in the United States. However, we're operating in the planner channel, and we also provide errors and omissions coverage at no cost automatically to you. And we feel, arguably, but we feel that insurance agents know more about annuities than almost any other category of person. What year or years was it introduced to the retail market? I mean, for many years, some shrewd investors have found this, but hardly anyone. About 3.5 years ago, we brought it to the retail market in the first organized way, and it's been going. Let's see. Please explain life contingent cases and the risks to the buyer. Most of our cases are not life contingent. Lately, we've had a few, and that means that all cases in general are just period certain, so live or die. Payments are made to the payee, to the new assignee. Live or die of the original annuitant, live or die of the new assignee. Life contingent payments are payments that will continue so long as the original annuitant stays alive. So you would not want to buy life contingent payments without having them covered by life insurance. And so anything that we have has life insurance to it. A number of cases have life insurance policies that were issued several years ago, far beyond the 2-year contestability period. There are new life cases, life insurance being issued on life contingent cases, and on those, there is a chance somebody could commit suicide during the first 2 years and the life coverage wouldn't pay, perhaps. There is also a Lloyd's of London coverage called gap insurance that's very inexpensive that is available to cover that. Why would you want to do life contingent? They tend to be a little bit higher in yield, and if they are properly executed, they are safe. They are a little more complicated. On the other hand, that's something that we disclose, and there are people that are amazingly, that want some of these things that you think would be more complicated than you think. But our general orientation is to have, we're in the safe money business, we don't want to be selling anything that's a ticking time bomb for anybody. We've never had anybody lose any money, and we're not planning to start. But you know, we can't guarantee that some carrier won't go under, but if you're careful, it's unlikely. Okay. Let's go for the people who would like to see a 5 or 6 or 7 minute of what an enforced annuity is. Let's go back to that. And everybody, of course, is welcome to stay, but if I've already seen this, you don't have to. So I'll pause and I will go back to the beginning. Show. Okay. On the way into it, just a quick review. Remember the automatic personalized marketing system for your existing client base. Please email me, call me, or whatever if you would like any more information on that. This is brand new, and I think this is really helpful. We've had some requests from people for something like this, and this is what we come up with. All right, so what is the price today to receive a guaranteed $100,000 payment in 10 years? Well, $83,000 if you buy a 10-year Treasury at 1.75. $83,000 if you buy a 10-year certificate of deposit at 1.75, if you can find one. $76,000 10-year MYG A plus AM Best Carrier at 2.75. $63,237 in a 10-year in-force secondary market annuity A plus at 4.5%. So it's about 20-25% less money or more money to get the same money if you buy a treasury or a 10-year certificate of deposit as the in-force annuity. Let's look at an overview and introduction to previously owned in-force annuities, a primer for introducing these products to your client. And one of my agents thought this judge was cute. So this judge, though, being cute, is the key to the safety of this product for your client. So what are investors finding right now? Stock market declined 63.8% from 2007 to 2009. The Dow Jones, 0% gain since 2008. This was on the day a few months ago when I made this chart. Home prices down 30% since 2006. Commodity index down 16.6% last 5 years. 10-year Treasury, currently 1.49. Bank CDs, national average 0.33% 1 year, 1.33% 5 years. What are investors demanding now? They're demanding protection from volatility, protection for assets. They want to eliminate losses. They want consistent income. They want competitive total returns, higher interest rates, and strong financially secure companies. Well, in-force annuities answer these. They're not subject to stock market volatility. They have a principal return guarantee, have guaranteed income, and the total return is roughly, generally 140% to 300% of what you pay in. Interest rates range from 4 to 7, and they're a top-rated insurance company. Well, let's go back to that judge and how this works. Someone has a personal injury claim, and an award is ordered by the judge in court. And orders typically lump sum or typically a stream of monthly or annual payments and or lump sum payments. And an insurance company is used to pay the injured client. The property and casualty carrier uses a life carrier, their life carrier, or another life carrier. Injured client wants cash now and is willing to take less, and calls the settlement company to receive a lump sum payment. So looking here at this ING payment stream of $500,000, let's say he's had it for 5 years, and he would like to sell what his remaining payments are. And let's say he sells the remaining payments, we buy them for $175,000. And then there are costs, legal costs to do this, and there's commissions to pay, and there's acquisition costs. So we sell it, we buy it for $175, we sell it for $200. So the injured client wants cash now and is willing to take less, calls the settlement company to receive a lump sum payment. We resell this annuity, which provides an attractive and safe return to the new purchaser. The buyer receives the exact same stream of monthly or annual payments and or lump sum payments as originally ordered by the judge. So I won't go into the Genworth one over next to it, but that one has an increasing payment schedule and so forth. Let's look at we've been looking at the seller side of it. Let's look at the buyer side, your clients. And here's American General, interest rate 4.75, purchase price of $134,935. These payments around $11,919 most years. Total paid back $189,711. Total return 141%. With a reference number of 3,400. And by saying reference number, that gives you a sense of relative commission on ING, 5.25, different ING. $172,000 for the price, $18,000 a year for the benefits, starting pretty soon. Total $252,000. Total return 146%. I think I'll just go along this sheet till we get to the summary of all of these that I was going to illustrate, whether ING or Prudential or Genworth, and across the bottom, rate of return of total return 146, 252, and over on the far right, Residential Life of New York, 7%, purchase price $66,259, payments deferred to 2032, starting at $12,000, increasing to $46,000 to $33,000, for a total of $333,290, and that's 503% total rate of return, total return. So $230,000 case, recent successes, $600,000 back to client, $13,000 commission, $127,000 case, $305,000 back to client, $8,000 to commission. Do you have to be a genius to sell these? With us, you don't have to be an annuity expert. We help you. And if you are interested in pursuing further, and a lot of you are already selling, but for those that would like to go more, get on our weekly bulletins, get trained to sell the product. We'll talk with you directly about cases. I will help you pick the plan, reserve it, and buy it. I will talk with your client with you on the phone if need be. And it all starts right here with you. Again, remember the automatic system. If you're interested, please email me for info. My cell number is 781-254-8550. And you can ask case availability. The best email is John and Laura, JOHNANDLAURA, at volbruckdrislane.com. That goes to both Laura Croteau and me, and we can get back to you, even if we're on the phone, to say the XYZ case is available or not. Do you want us to hold it? Those kinds of things. So I will check after the webinar to see if there are any unanswered questions, and I will follow up and answer those. I want to thank everyone for attending the webinar today, and I hope that you have a great rest of the day. Thank you. Bye.